Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish black crow yesterday and a very mild follow-on to the previous session's unusual indecisive spinning top and key reversal down combination. The market peaked below the significant 50% Fibonacci line, the June 2020 to January 2021 move at 117.58, then retreated back up again. Overall, we continue to slide down just above the middle time, currently 117.08 of the January to May bearish Andrews pitchfork. This pitchfork was taken on the mantle of the bearish angle of attack right now. The other feature I'd highlighted, the mid-June to date descending wedge pattern, continues to also be pacing the market lower between the downtrend, currently 118.28, and the lower trend line, which is almost parallel with the middle time, currently at 117.29. Now, wedge patterns can break in either direction, but they have something like a 70% chance of breaking higher, so bear that in mind. I can't give any targets as yet, but I can give an idea of the size of the move when it happens. An upwards break would be about 135 ticks on top of the broken downtrend. The downwards break would be on about 65 ticks off of the broken lower trend line. Now, the descending wedge terminates in early September, but I imagine we'll have a break before then. One final point: beware of false breaks with this wedge and wedges generally. They are really quite common, so please treat all attempted moves with caution. So far today, a further move lower, dipping below yesterday's low and once again challenging the 50% Fibonacci line at 117.58, but then retreating back up and looking like an indecisive, doji cross, hammer, bullish doji, a bearish doji, whatever, with possible actually maybe more bullish aspirations than bearish at the moment. Cable, aka sterling against the US dollar. A fourth bearish black crow yesterday and a good follow-on lower to the previous session's strong bearish opening black Maribosa. However, the most important feature was how it was the second consecutive close below the rising long moving average, currently 137.08. This continued action has opened the way to look at the move down since the start of June as a possible bearish measured move lower, with a potential target X in the 134.25 area. This now also opens the way to the idea I put forward last month of a possible very large Adam and Eve type double top formed over the whole of this year. A confirmed second consecutive close, a good second consecutive close I hasten to add, below the interesting 61.8% Fibonacci line of the whole of the 2016 action at 136.54, which actually looks like an ad hoc neckline, would help this idea a lot and start me looking at possible target levels below. So far today, further move lower, still below the lesser Fibonacci level at 136.54, but also still within yesterday's range so far. Please continue to have on your mind my recent comments on how this will be the first challenge to the long moving average since September 2020. Please note that challenge in September last year was unsuccessful. As a final postscript, today looks like an indecisive doji cross right now, which is something you don't really want to see if you're looking at that Adam and Eve head double top pattern. Euro sterling, a fifth bullish white soldier yesterday. It was the second consecutive close over all of the following: top of the May to date based bear channel, currently 84.85 to 85.74. The descending medium moving average, currently 86.02, and its partner since mid-June, the short medium moving average, currently 85.91. This is all a continued reaction to the market recently getting closer to the support at 84.69 and rejecting it. This support originally halted the decline back in April, and this time has already set in place with nearly 2 weeks to go. Let's say 1.5 weeks, but 2 weeks to go for July to possibly be a monthly key reversal up in this case. Yes, they saw a move up over the 86.5 level to set the conditions, and they only halted at the next overhead resistance, which is the April 2020 low at 86.69. Beyond that, we have resistance at 87.20 and then the declining long moving average currently at 87.60. Now, so far today, a small try higher, hardly worth mentioning to be honest, The market has currently dipped below yesterday's close, but not last Friday's as well. It's holding steady. It's actually like an indecisive doji cross right now. US dollar against the Indian rupee. An immediate countering, bearish engulfing pattern and bearish closing along Black Mariposa yesterday. Seems the market has had enough of the upside for the moment, as it also closed back below the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. Further ahead, we still have the April 2020 to date downtrend coming into the frame at currently 75.21, which I suspect may have something to do with the swift move back down. Meanwhile, below we have support from the 50% Fibonacci line of the February to April 2020 move at 74.26. It's also worth watching the short moving average, currently at 74.53. This seems to be acting as a dynamic support level last week and now this week, especially yesterday. So far today, a lower open below the short moving average, but an immediate move back up over it, though capped so far by the 50% Fibonacci line at 74.63. US dollar against the Brazilian real. A higher but bearish black crow yesterday. The market pushed up over the descending upper time, currently at 522.92 of the newly drawn bearish Andrews pitchfork for the action from late May to early July. Makes me wonder if this pitchfork will actually last this week for such a move. However, prices did close back below the upper time. There could be an argument for the late June to date action being a bull flag, but for me it is early as yet. I'm not discounting it, it's just early as yet. So you could as easily argue the July action is a double top, and that could also be the case. It's too early for that as well, so all it needs is time. Meanwhile, below the rising short moving average, currently at 512.85, is still acting as support. This all goes contrary to the remarkable number of dead crosses we've seen here since late May. It all now depends on whether the bearish Andrews pitchfork will hold today. Beyond, on the top side, we have the declining medium moving average, currently at 534.26, and the long moving average, currently at 536.02, both now entering the frame. US dollar against the Mexican peso. A second bullish white soldier, indeed just about a bullish white Mariposa, and the first action that wasn't a countering move in 5 whole sessions. This doesn't mean that we've automatically stopped the extensive indecision in this market, indecision that stretches from the fall back to the levels originally seen in mid-April, but which recently started again in late June. Yet it does indicate a possible beginning of a try higher. The market tested up through the overhead medium moving average, currently at 20.1385, and the long moving average, currently 20.1935, halting at the latter and closing just under the former. Be interested to see if these two will be challenged again today. Overall, well, the adherence of the market to the neckline of the February to March head and shoulders top, currently at 1987.68, is still indicative of this neckline acting as an attractor to the market. Now further below, we have the April to May based congestion zone between 1985 and 1995, with the neckline currently 1960.90 of the late January to mid-May head and shoulders top that may be acting as a support within it. Or outside of it actually, really. So far today, an open ever so slightly over the medium moving average and a test up to the long moving average. However, since then prices have retreated and we're now down below both moving averages and lower than yesterday's close, and in danger actually making a bearish dark cloud cover pattern if we're not careful. Today, well, thank you for listening for today. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.